day all. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, the 6th of August, 2019. We're about 4:17 p.m. Central Daylight Time. I need a night's sleep. I have been getting up 4:35 in the morning the past 2 nights because I wanted to get my morning subscriber videos out very, very quickly. I saw something in the different markets, and I mentioned last night in my written commentary before it even was going on to take a hard look at the 200-day moving average of closes in the Dow, the S&P, and the NASDAQ. You've already been through it and been under it for a while in the Russell. The Russell's play was looking at the lower Bollinger Band, which it hadn't been at. Let's take a look at what I'm saying. First off, you can see on a weekly area chart of closes that we're down just about 2% the first 2 days of the week. You wouldn't know that. It feels like we've been through the mill. But that's all that you're really down. We've been in a corrective mode from the 30-24.5 settlement down about 50 points overall. Not 150 points. Not the end of the world, but certainly a correction in the market. You see right here how this market fell apart, and we've had a succession of about 6 days in a row down, and today we make the lowest low of the move and we get a solid bounce. When you put on the market the swing line, you've had the period right here, lower highs, lower lows, and it just fell out of bed. It's been a confluence of crazy events, as you all know. Let me show you what I'm talking about. We know that yesterday was the currency talk, and then what happened is, in essence, the market is looking at that, gets its feet under it, and it's trying to figure out what next. Well, China did come into the market and do a fix, and they didn't let the market get away from them. That was very important. So the market first starts down here, and here's the 200-day average. Here's the 100 and the 18. The pattern's down. You're in a downtrend. In the past, the 200-day has done a good job in June, and if you go back a little further, it's done a nice job of trying to hold the market for a very long period of time. But I'm more concerned with the immediate June number, and this was a zone the market found support in. You came down last night, hit that, got into the zone again, and then you turned away back to the upside. One day does not make a bottom, but it's certainly an argument the market got a little overdone on that. You can see in the market that when we look at Bollinger Bands, you've been a couple of days now under the Bollinger Band. On this day, you were under it, and on this day, you were under it. So you have one. I don't know if you were on this day. I don't think you were. You've got 1, 2, 3 days in a row. 4 is pushing it. 5 is really getting stretched out. And you have today a market that started fighting at the lower Bollinger Band. You can see it finished 28.76, literally a 1.5 under that number in a market that got oversold and gave you a bounce. What about NASDAQ? Went to the 200-day average, rallied back to the Bollinger Band, and ran out of momentum there. Sometimes when you get under these bands, you run to them. And remember what I used that word? Running the band. This is called running it still. You ran back to it and the market didn't want to add anything. Resistance, the 100-day average right now, I would assume. Dow Jones down to the lower band, right back to the lower Bollinger Band, ran out of momentum there. Resistance comes back in beginning at 26,286 up to the 18-day average of closes. In the Russell, you've been under the lower band 2 days, so you ran back to it. Are you getting the momentum idea here that the market's doing? None of this is bullish. Now, when we take a look at the VIX pulled back into the Bollinger Band. And if you look, you were over it, over it, over it. You normally don't stay more than 4 or 5 days outside of that band. I count each one of those days as one of the percentage points that the theory of Bollinger Bands that you'll trade within them 95% of the time counts as. And today, you finished 2017 under that lower band. When we come to the bond market, you've extended this rally the same way. Is it due to possibly move to the right-hand side? I think so. Doesn't mean I'm right. There's nothing bearish on the chart, but you are extended in an overbought market. The 10-year note is the same thing, extended. Notice this not slight, but very sideways action. For those of you that watch me regularly, you know I tell you this is like a spring in a pipe, and when it pops, it can be a son of a gun, and that's what it did. TLT, 1, 2, 3, 4 days in a row over the upper Bollinger Band. So it wouldn't surprise me. Not at all. You can be up tomorrow, but the day after, I have strong denial about. That does not mean I'd be bearish. It's just that I'm looking for the pros that look at this. They go, how many days do you say successive over or under a Bollinger Band? Dollar index fell back to the 18-day average yesterday and today. It's wishy-washy now in there as it's correcting an overbought condition. And as it's wishy-washy, the euro is fighting back and forth at its 18-day average. They're mirror images of each other right now. Momentum up, no trend, fighting the battle at the 18-day average of closes. The British pound, will the market go again and try to challenge the lower Bollinger Band? I wish I had the answer, but you've got the locked-in momentum that is bearish. You've got a trend that is down with lower highs, lower lows. It had been running the Bollinger Band. It's moved to the sideways pattern, and if it wants to resume this, taking out today's low could be a warning sign that the market's ready to resume possibly that downtrend. I don't know that I'm right, but that's what I look at. In the yen, outside key reversal day down. Highest high of the move. The market made the highest high, took out yesterday's high, yesterday's low, closed lower on the day and under the day's opener, and paying attention to that Bollinger Band in an overbought condition. Bitcoin, I'm looking for the resistance right here at the upper Bollinger Band. I said it yesterday. I'll say it again today, and you finished 111,830, and that is under the Bollinger Band. So I think the pros have taken some money off the table. That does not mean they're bearish. That's the resistance point, you hit it. Brent versus WTI crude, a bounce in the differential, but not a change in the trend. And as you can see, you're still running this lower Bollinger Band in a downtrend here. Same in the WTI crude, same in the gasoline market, same in the natural gas, but not trending here. Here you got the higher high and lower low. You know, we talk about all this and a lot more in our chart of the day. Chart of the day is a free service to you. And we put you on a list, and then we start mailing these out to you, and they're emailed, obviously. And we cover a different market, sometimes 2 markets a day, with a study that is meant to give you off of a certain chart pattern that we do teach you in a video series that I put together, and it's free to you, how to use this. You say, well, I don't have that particular software. It's okay. If you use our charting software, it's there, and we'll give you a free trial to our charting software if you haven't tried it. So the idea here, once a market gets going, where might that be moving? Either to the upside or the downside. Where's a correction zone? How do you find out more about it? Give us a call or go to our website. When you go to the website, on the splash page, it's going to say Ira's free offers. Click any. Fill in the chart of the day, what you'd like. We'll mail you by email all the info you need, and you can click up here to get there as well. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.